What's going on YouTube? CJ here from the Trading Collective, coming at you today with another YouTube video. Today's video, we're going to be going over the market structure, some really basic tips on identifying market structure and when to trade depending on the type of market structure. Hope you guys enjoy this video. Be sure to drop a like and subscribe if you enjoy this content, and I'll see you in the next one. Let's get into it. Okay guys, I'm going to be using the USR from the Selene Algo Suite. There's more info in the description down below. It's basically going to show us very easily what the higher high, higher low, lower high, lower low, those types of things are. Those things are known as pivots. We want to be able to identify these areas so that we can identify our greater market structure. In this case though, we're going to be talking about a 3-minute time frame. This identification kind of process works on both small time frames and large time frames. There's a lot of continuity. It's basically identifying, again, like I said, those pivot points. This USR is going to help us do that by helping you guys, a viewer, actually visualize this. So right here we'll see a higher high. Down here we'll see a lower low, lower high, and a higher low. So these are the 4 different types of pivots that we really need to be concerned with. So depending on the sequence of these pivots is going to tell us what type of structure that we have. So there's going to be 4 different types of structures. So there's going to be a confirmed uptrend structure. That's going to be 1. There's going to be confirmed downtrend structure, number 2. And then we have our unconfirmed structure. And you can argue that we have an unconfirmed uptrend or unconfirmed downtrend. Okay, so areas like this are going to be our unconfirmed areas, right? But areas like this are going to be our confirmed areas. I'm going to show you guys exactly what I look for when it comes to identifying those and how I also trade them. So let's take a look at what makes a confirmed uptrend. So a higher high, and a higher low. So any sequence of these 3 are going to confirm our uptrend. The best ways are to get a higher high, higher low, and then a new higher high, which we can see right here. So if we were to move this right up here, this would be a confirmed uptrend. Confirmed uptrend, trading within a confirmed uptrend, being long, is a safer way to trade. You're not fighting the trend. Fighting the trend would mean trying to go short during a confirmed uptrend or trying to go long during a confirmed downtrend. I'll go find a scenario for you guys to show a confirmed downtrend now. Okay, so here we have a confirmed downtrend. I'm going to show you guys exactly what that looks like here. So here we have a lower high to a lower low to another lower high. After we have these 3, we can assume that we're going to be making another lower low here. The way that I like to trade these are once we put in the lower high up here, then I'm looking to enter a short position off of a entry like this, a big red engulfing candle, and I like to just take it to that previous lower low, which you can see is about this zone here. It's also drawing out the dotted line down here, extending out. So I like to play to the double bottom. Personally, I don't like to play for the break. I like to always play for the bounce, meaning I always play to that next support or to that next resistance level. It's just a safer way for me that I've found to be more successful. So in a confirmed downtrend structure, we have, again, a lower high to lower low to another lower high. We look for a good entry such as this right here, red engulfing after making that lower high. And then we're just looking to trade a short position down towards that double bottom. Time on this trade would have been about 18 minutes. And depending on where you got in this candle, you had about 70 cents worth of short on SPY, which is going to be about 3/4 of a delta cycle if you're trading SPY options contracts. So can be a very lucrative position to take. Certainly, that's how I like to trade. I like to trade short-term options contracts using this market structure on a very micro time frame. I'm able to find things such as this throughout the day. where I can continually get base hits, not hold positions for a very long time. Day trading, yes. Scalping, definitely. But yeah, I'm going to show you guys why I don't like to trade sort of our unconfirmed areas. And this is sort of the times that I like to just kind of sit back and let it play out. Okay, so just to the right, after we've gotten our confirmed downtrend here and we've entered our short just like we had talked about, entered our short here, taking it to the double bottom, we're taking profit, we're getting out. What are we going to look for next? Well, we might have a confirmation and continue to push lower. However, I'm not going to continue to be in a short position once I've already taken profit. We liquidate a little bit lower, as you can see down here, and then we start to reverse back up. We actually get a slight break in structure here by putting in a higher high. Also, it's important to note on the USR, I currently have it on the very high setting for our pivot and zone sensitivity. So after we put in a higher high here, we've now broken our confirmed downtrend structure earlier. So this is an area or a time that I would just kind of sit on my hands and wait, which is an incredibly valuable thing to understand as a trader, to not just, try to force a trade because you're bored, try to force a square peg in a round hole, if you would. So what are we going to do? We're going to wait until we get our next confirmation. So after putting in that higher high, we've now have a unconfirmed structure, an unconfirmed downtrend, right? Now we're putting in our higher low, so we might be switching to an unconfirmed uptrend, right? So what are we going to be looking for? The break of that previous higher high, which we have a pretty mediocre break here. We don't have real establishment over. But once we've put in this higher high up here, that's exactly what I'm looking to trade. So we're going to see the pullback from that higher high. We put in a higher low right here. And then it's the same example or idea of what we were doing before. So I'm going to look for our entry after that higher low. This looks like it's a good candle here to enter. And then we're going to take it to that next resistance, which is that higher high we recently put in. Looking to take profit there. Time on this trade, depending on when you had gotten into, when you were looking to get out, if it was on this candle or the next, it's about 9 minutes. So 9 minutes, and again, about 77 cents on that trade, 3/4 of a delta cycle. If you're trading options contracts, which I typically do, but this is a type of thing that I like to trade all the time. And then you'll see here we have another higher high, which is good. We get a little pullback. Then we put in a lower high, meaning we're not able to make a new higher high. So then we break our most previous higher high. We get a lower high again. So it looks like we're starting to confirm a downtrend structure. Then we see a full break of that previous higher low here. And then the market closes just a few minutes after that. But there was definitely a short opportunity, if we're pulling that line out from this previous higher high back here, that once we confirm below this higher low here, we could be taking a short down to this support level. Again, this would be like last trade of the day. Time on this type of trade looks to be, as we're hitting it, only about 6 minutes if you wanted to hold an extra candle or so, because it's the end of the day. Anything past this point is gravy, but I like to take it to that support level, drawn out and extended from that previous higher high. And that's about it. That's about it for understanding market structure. Again, this was just on a 3-minute for SPY. This exact process applies to 15-minute, 1 hour, daily on any ticker. So identifying market structure is a key trait that every trader needs to be able to understand and kind of put in their tool belt. It's a very basic one. It's in my opinion really overlooked, and I think we could all do a little bit better about being disciplined and trading in the right market structure, trading the right positions in the right market structure. Again, all this work was done using the USR. More info for that in the description, 7-day free trial, and I'll see you guys in the next video. Take care.